So we're moving in great speed today again, which is amazing. Our next keynote speaker will talk about digital technologies for mobilizing and accelerating sustainable future. So this person is super interesting. She's the director of the Green Digital Finance Alliance with the objective to harness the power of fintech to unlock financing for the Sustainable Development Goals. That was a mouthful. And the Paris Agreement on climate change. She has also been the external advisor on tech development to the Danish Ministry of Foreign Affairs. I am super pleased to welcome Marianne to the studio. Welcome, Marianne.
Thank you so much. What a pleasure to be here and address such an insightful audience. Today I'm going to focus on exactly what Sarah said, but I'm focusing on Asia, so fintech to accelerate green finance in Asia. As you've already heard this morning, the Asian region is one where fintech is scaling maybe faster than in any region of the world. But then let's look at ESG data markets in Asia, and the picture looks very different. First of all, it's a region that's marked by diversity. And it's a region that is rapidly catching up, but has definitely had fewer ESG assets under management than what we've seen in the European Union and the US. In terms of diversity, we've suddenly seen Japan emerge as the climate risk disclosure champion in the world, with more than 200 companies having signed up to the TCFD, so the Task Force for Climate-Related Financial Disclosures. It's also a region that is marked by very high internal savings rates. Most of these savings are exported to other regions, so they're not invested in assets in Asia, but outside. And in the next 3 to 5 years, the younger economies in the Asian region are going to see the first intergenerational wealth transfer. So we're going to have quite a lot of high net worth young Asians, millennials, that care about ESG and that also cares very much about digital distribution channels. So those that are building up wealth management units in Asia, they better apply a digital-first strategy for their ESG offerings to the high net worth population. So that's one trend. Over the next 10 to 15 minutes, I want to share with you how sustainable digital finance look in Asia according to 3 other trends. The first trend is shaped by the financial regulators in Asia. The second by the needs of the real Asian economy for the green transition, and the last by some of the leading fintech platforms in the region. So if we look at the first trend, then globally we're seeing a shift from a principles-based to a rules-based approach to sustainable finance. We've seen it in the European Union with the issuance of the new regulation, the taxonomy for sustainable finance, which basically clarifies what assets can you label as green and which can you not. So we're seeing the same thinking travel to regulators in Asia. The most significant one of it was this year that the PBOC issued a new regulation that requires all listed companies in China to report their ESG risks. Another one was the stock exchange in Hong Kong that from July of this year require that all their listed companies have a board statement that explains how they're managing ESG risks. And we're also going to see the first developing country in the world, Malaysia, issue a taxonomy for green finance. Not to mention Singapore, where the Sustainable Action Plan embodies a lot of that same thinking. Now, those new regulations are driving a fast demand for deployment of fintech in the region for ESG products and services for asset managers and asset owners. So now let's look to China to look at what does that market look like. When we talk about China, you often hear that there's a lack of ESG company disclosed data. And it's very true. It's been scaling rapidly, but it's still only 3,040 Chinese companies that are currently disclosing their ESG data. But what is specific about China is that it is the nation probably in the world with most machine-generated environmental and climate metrics. Because of the war against pollution, China has so many sensors that are basically capturing environmental metrics. But what is true is that a lot of these metrics are not translated into an investor-ready format. So that is the emerging trend we are currently seeing, fintech emerging in China to help to do. What you see on the slide is called the Blue Map app. And that is one of the most advanced platforms that are offering this. So basically what they do is that they take the disclosed data, disclosure according to regulations, so environmental violations of a company, their self-disclosed sustainability and annual reports, and they apply natural language processing to pick up what they have of ESG metrics. They then overlay that with asset-level environmental metrics that are IoT harvested. And these are data sets on different greenhouse gases at asset level, leakage to soil of pollution, leakage of pollution to oceans. And they crunch that with AI and big data analytics, and they now offer an environmental score on a very large number of companies for asset owners and asset managers in the region, but also because of the fact that Chinese financial markets are gradually opening up to external investors that are demanding this information. Now let's turn to look at what are some of the bank practices that are emerging in China for deployment of fintech for ESG. And there, what is interesting is to go to the 5 green finance pilot zones that were launched in 2017 in China, because that's where we see some of the most innovative practices deployed by banks. I've just brought with me one example today, which is a bank deploying a cloud-based platform to basically try to automate green labeling of assets and projects, so to bring down the transaction costs. So what they do is that they apply machine learning and AI to transactions and do an automated screening of whether that transaction lives up to national and local green credit standards. The second or the third example I have with me today is where you see a satellite. And that is if we go to the Shenzhen-based WeBank, which is owned by Tencent. They have just bought a fleet of satellites. And they apply AI to the imagery from the sky on climate risks of Chinese companies. This is very early stage, but they see many opportunities in these types of Earth-observed data sets. They can give you climate risk data that no company can disclose themselves. It comes at a much higher frequency than an annual report and a sustainability report. So we're definitely going to see much more of layering in to these type of fintech ESG solutions, Earth-observed data sets going forward. Now let's look at the second trend, which is from green only to shades of green. Asia is a region that has been rapidly increasing its green bond issuance. It's still behind the European Union, China, but it's getting there. And it has also at the same time a mix of having regulatory clarity to a greater extent than in many other places of crypto assets. So that's also why we saw that the World Bank reached out to the region in 2018 when it wanted to issue a sustainability-linked bond on the blockchain. So it asked CBA in Australia to become its banking partner. And the transaction is what you see on the slide. So it engaged 7 investors, mainly institutional investors, that all put in their bid directly on the DLT platform. There was one institutional investor that had to withdraw because of internal custodian rules did not allow them to participate in a DLT security offering. The book building happened automatically on the platform. The only thing that did not happen on the platform was the coupon payment. And there it was not the lack of digital readiness on the part of CBA. They actually had an internal stablecoin called the yellow coin. The question was regulatory barriers at the level of Australia, and it was mainly related to taxation of tokens that meant that that happened off-chain. Now, fast forwarding to today, what we've seen is that we've seen the first green sukuk, so sovereign green bond, issued in Indonesia to retail investors. Because as we heard, we have high internal or national savings rates, so we need ways to unlock capital into green assets. And one answer by Indonesia was a green retail sukuk. And it was offered directly on a mobile platform. So the 50% of the investors were millennials, and everybody could just put in their bid directly using 2 mobile money platforms that were linked to the 27 participating banks. Now, what we see in the region in the green bond space also is that we actually see that China shifted or changed the list of eligible green assets for green bonds this year. So they actually deleted the category of clean coal. And that signals a harmonization with international best practices. But it does create or introduce some complications for the region, because there are a number of the economies that are highly coal-based. So what we've seen in the region is that we've seen the first bank, DBS Bank, actually issue a transition bond framework. Because what the region needs to be able to catalyze capital into the green transition is transition finance instruments. So that is bonds and loans where they are linked to transition KPIs, so that you get rewarded for shifting your energy mix towards renewable via a lower cost of capital. And there, fintech really has a comparative advantage to be deployed for that instrument, because they can automatically harvest information about compliance to the behavioral KPI. They can automatically use, by leveraging AI, machine learning, etc., adjust the interest rate according to how that company behaves. So we're expecting to see much more of that going forward in the region. Now let's turn to the third and last trend in Asia that I'm going to share with you today, which is really shaped by the mobile money platforms in the region. So payment services is the most scaled and mature part of the fintech space in Asia. So what we're starting to see is that some of the really scaled mobile platforms are starting to build in green functionalities into their offerings, both to their SME customers and also to their retail customers. I will focus on the retail customers today and share with you an application that most of you, I'm sure, have heard of before, which is the Alipay's Ant Forest. So if you, as a user of the Alipay app, download the functionality, which is a mini app called Ant Forest, then you invite AI to analyze and give you an automated carbon footprint on 18 of your daily behaviors. So whether you take your bike, drive the bus, or take the car, you will get an automated feedback on what is your carbon footprint on that behavior. Then in return for shifting to more carbon-light behaviors, you gain green energy points. And all of that is gamified on a platform, so you can steal each other's energy points. And you can then start, as you accumulate enough, to plant virtual trees on the platform. And you can choose, when you have enough energy points, to mirror what a tree can actually capture and store of carbon. You can actually plant that tree in real life. And you could say this is a very Chinese unique story. It has 550 users today of the Alipay Ant Forest, which is basically the world's largest informal carbon market. But as of last year, we saw it scaling outside of mainland China for the first time. The GCash wallet in the Philippines introduced it to its users, and it has scaled usage exponentially. I had the pleasure to be on a panel with GCash Forest yesterday, and the number you see on the slide, the plus 3 million users after 1 year of operation, is a gross understatement of what they have accomplished. So here really what fintech has really cracked is to make CO2, climate finance, all that jargon, something very abstract and something for large industries, to make it a very personalized experience, linked to your behaviors, and your impact also linked directly to your wallet. So they use AI-assisted thermal mapping for you to go in and click on the areas, which is the Inner Mongolia, where the trees are planted, and directly visit your tree. Morning, midday, and evening, you can see how it's going, and that's your climate impact. So we've tried to say, okay, what if we were to apply this individualized carbon accounting system on mobile wallets across 7 high-emission countries. Would it really have an effect on the Paris Agreement? Because we are all very small, and what we can save is not tons of carbon, it's grams of carbon. But when we looked at it and did that projection over 7 markets, it actually showed that citizens could collectively contribute to reduction of emissions from public sector transport for 8.6%. which is a significant contribution for us to arrive at a climate-secure future. So what is next up for the region? What we're seeing some smaller use cases of is to gradually move or add on from the climate innovations into also nature and biodiversity. So on the ant forest application now, you can not only choose to plant a tree, but you can also choose to preserve an area, to let it regenerate, and for biodiversity to get back to that area for a while. And we also saw the CBA Bank issue a bio token, where the idea was really that us as retail investors at one day would be able to invest in a koala or another natural capital asset that just tends to increase in value over time. And now, next year, 2021, is the big year for nature. In China, in Kunming, every leader of the world is going together to sign the next convention on biological diversity. That's going to drive a demand for fintech to go in and innovate even more on nature. Thank you.
Thank you so much, Marianne. We have some questions. I was thinking when you spoke, then when we look at like the risk when it comes to the accelerated use of tech and so on, what are your thoughts on, will it be like a constantly accelerating factor, and will it sort of stay in the way for the sort of revolution?
I think it will be a constant accelerating factor.
Yeah.
What we need to see in the green fintech space, which has not happened yet, not in China, not anywhere, is that we need to see the platforms linking to green intelligent assets in the real economy. So what I mean is that we need that solar cell to be able to report directly to the ledger where you have the green bond, so that you don't have all the paperwork and the middlemen and all the potential risks of misinformation.
Yeah.
So I think that's sort of the next big thing is definitely fintech integrating more with IoT, and part of that also with the Earth observation data sets.
Yeah, but do you see a trend towards that?
Definitely,
Yeah.
it's definitely going in that direction. The problem is it's still pretty expensive to buy a fleet of satellites and put it up into space, right? It's not something that you do in a lab or with your friends and foe money. It's for the big guys still. So therefore, we need more sort of public. The European Space Agency is just sending up a big mission called Mission Biomass. So it's going to map all the biomass on the Earth. So if that's going to be open source data sets, then we will have the data to train the algorithms on, and a lower barrier of entry also for the younger innovators. But the problem is the costs of the deployment of this technology.
Yeah. Super. Thank you so much. I'm super happy to have you here.
Thank you. Thanks for having me.
Of course.
Pleasure.
Thank you.